Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Chris Dearborn. He's the Managing Director of Nasdaq's Markets Intelligence Desk, and this is your weekly review from the mid. Chris, as always, our favorite video of the week. We know we're winding down. It's 2 o'clock. It's Friday. And
absolutely.
Again, what looked like an empty calendar, another busy week, a little bit of green towards the end of the week with some potential trade softening, but under a little bit of pressure going to the close.
The markets are looking pretty good here. We're up over about 1%, give or take, on the major indices. A lot of that green coming here at the end of the week. Volumes have been relatively stable, still trading under the yearly average. This week we averaged about 6.6 for the on an average consolidated tape, 6.6 billion shares. The average has been about 6.8 billion. It's come down a little bit. We had one day Wednesday when we did over 7 billion. So you've got some rhetoric back and forth, but there's been a lot of different tells this week that have been driving the markets. Obviously, the trade talks have been one of them. A little softening there, as you said before, definitely gives confidence to investors that things are going to right themselves as opposed to a trade war, which nobody really wants, especially on the investing side. As we said before, investors do not like uncertainty, and they want certainty in political aspirations here. And if you want to use that terminology as a stranglehold, China's taking a wait and see atmosphere here with the U.S., and it's not precluding them from talking to other partners. They've stepped up the rhetoric with Russia. They've stepped up the rhetoric with Japan. You had a major conference there that agreed on a number of different items, including trade, military, and economic standpoint. So it's not like China's slowing because the U.S. doesn't want to come to the table with them. They're moving along, and I think that's starting to finally play through here, that we're going to see those markets kind of rebound a little bit.
Right, and outside of the trade talks, too, we also want to touch on the manufacturing consumer data that came through this week.
It's been a boon of data. So CPI came out this week, and it came in a little bit lighter, which gives pause to the inflation story, which was really what happened earlier in the year. And that kind of throws the Fed model into a little bit of a tailspin there, because when you're looking at a cheaper basket of goods across the entire country, you're wondering, why is it cheaper? But then you see a number of other items come into. Retail sales came out today. They seemed a little bit softer on the top line and the headline, but really they're not. Last month's retail sales got revised up significantly, and with that, you're seeing strength in the consumer. And that goes back to wage growth that we saw with non-farm payroll last week, people looking for jobs and getting those jobs, and more importantly, the unemployment level's been due. So you're seeing consumer confidence rise here, which gives bode to a good market, and that's kind of keeping a healthy float here. Really, at the end of the day, things are pretty good across the board. GDP is good. CPI was a little bit weak, but really is pretty good. So we like to see that price come down a little bit. Retail sales were a little weak, but really revised up for July, significantly outshadowed the August weaker number.
Well, the big news this week, of course, was Hurricane Florence impacting North and South Carolina. There's a reason why traders pay attention to natural disasters, and you don't want to think of it as, there's something that we're expecting, how can we make money off of this? But it really does impact big complexes like oil, for example. For those of us or for the audience that's newer to trading, 2005, I think Katrina was the best example of it. I remember watching oil prices. I used to sit behind our oil pit when I was on Prue's desk, and I've never seen those guys so busy. I mean, they were just continuing to watch the price of oil tick for tick until they were able to discern what the damage was actually going to be.
Absolutely. Nobody lives in a vacuum, especially when there's a natural disaster across the board here. And, our hearts and minds go out to the folks of the Carolinas, Virginia, everybody else impacted by this storm. Luckily, the storm was downgraded from a 4 to a 1 on the category scale, on the hurricane scale, but that's not going to diminish the damage that could possibly take place. And it's going to take us days, if not weeks or longer, to kind of find out what that flooding and the wind damage and everything else is. On the trading aspect of things, there are lots of different stocks and sectors to play here, but again, it goes back to that uncertainty. The same with the macro play with the trade talks, the same with any of the other items. Traders do not like uncertainty. Uncertainty breeds volatility. You're not seeing it in the equity markets as much. You're seeing one-off stocks kind of bounce up or sink down a little bit because of this. But on the commodity side of things, people do get nervous. And with that, you're looking at, say, hogs, and you have some of the largest manufacturers of pork bellies, closing their slaughterhouses because of this. What is that going to impact? What is that going to do for the price of pork bellies there? And then more importantly, what is that going to do to the companies that are producing them? So you're seeing potentially revenue streams being impacted by this. You're seeing potentially infrastructures that may have to be replaced or rebuilt. So you're looking at bottom line numbers that are going to be impacted to the stock price, and eventually affect the EPS.
All right, let's wrap it up with the trading week ahead. Again, light on the earnings calendar until we get into Q3 earnings season. A couple big names out there. FedEx,
Right.
which has always been an economic barometer, right, in terms of how much shipping activity is taking place. And I think it'll be a good look going into the holiday season. Oracle, Micron, which has
Right.
been a heavily traded name. And then we have housing data. I think that's going to be really key because that seems to kind of be the wild card in terms of
Right.
the healthy data that's out there.
Prices are trading kind of near highs, and depending on where you are within the U.S., some of those prices are significantly higher. And with higher incomes, you're seeing people spend a little bit more. So it's kind of curious to see what's been going on there. The home builders are going to be a key factor here. You take away what's going to be happening on the East Coast here with the storm, but you want to see what's going on across the board. You want to see what the prospects are. So those are very important. There's a couple of other items that are going to be extremely important to traders next week, and then for people who follow the market, especially the S&P 500 moving forward and all the drill down indices that offer that. We have Quad Witch coming up next Friday. It's simultaneous expiration of single stock and index options and futures. So with that, you're going to see a lot of volume at the open next Friday and a lot of volume at the close. But more importantly, at the close next week, the S&P is rejiggering their indexes, and they're doing away with the telecommunications sector, which has really been a lagging sector with a handful of members, and creating their new communications sector. And with that, they're moving a number of different stocks from one sector to the next. Your companies like Netflix and Facebook are going to be moved from one sector to the next. And with that, you're going to have a new configuration of S&P sectors that the ETFs are going to have to follow. We're not expecting to be a huge trading event, but it's more going to be like a volume event. But more importantly, going forward, the global industry codes, how we sectorize stocks and what sectors they're in, more importantly, they're peerless,
Right.
are going to change. And people have to be aware of that, especially if they're comping one company to another, and they're not really comped together according to these industry codes.
All right. Well, thank you very much for joining me at MarketSite. And guys, next week we're taking the show on the road. I'm going to be at the Nasdaq Felix Options trading floor. We'll have Sean Cruz from TD Ameritrade co-hosting with me for the morning, and a number of other guests joining me throughout the afternoon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.